I'm going to be breaking down my current P&L and my favorite trading setup for the month so far that's made me a total profit of $86,000 in just 15 days. So today, as you guys can see, what I have currently pulled up is my trading journal here, which is Marketmemo, which we haven't officially launched just yet. This is going to be our very first version of Marketmemo, and that doesn't include the AI mentor here as well. So I'm going to refresh the screen here. I'm going to make sure that I'm actually going to go ahead and select just the month overall so far, so you guys could see for the month I'm up $86,850. I'm going to show you my trading account here as well. This is just one of my trading accounts, and this is just one of the portfolios I'm going to be showing you guys specifically. But as you guys could see, top left hand side of the screen, there's a live symbol, and then you guys can see my account balance here. So when I show 86,000 in P&L, I don't want you guys to just think I may be trading with 100 grand. I've made 86%. I'm really only risking like 1 or 2% per position, and I'm up just a little bit over 10% on the month. So I'm maintaining a very small and light risk portfolio as I continue to build extra buffer. And my real goal is to get this account to the $1 million mark, which we're getting closer and closer as time progresses, but I'm taking it slow really. So I'm going to actually refresh the screen here so you guys can see there's no discrepancy. I'm being as transparent as I possibly can with everything. You guys can still see the live account here, and you guys can see $86,850 in P&L. So there's no discrepancy anywhere. Now, so I want to go over my statistics first before actually going over the setup that I look for. And all of these trades are going to be based off of order flow setups. So the first thing I want you guys to actually look at is going to be the green days versus the red days. So first and foremost, we actually have a total win-loss ratio per day being 80%. So I'm winning 80% of my trading days. I'm ending 80% of my trading days in green and 20% in red. Now, currently I have an average R multiple of 1.6 per trade, but my R multiple is a little bit skewed just simply because when Trade Locker actually fills you out of a position, sometimes it may take like two or three it may take like 2 or 3 different positions to fill me out of a trade, because sometimes my contracts, my lot sizes are pretty big. So like for example, this is all one trade here. So, you know, that's like 5 different losing positions. So I feel like my win rate is supposed to be higher, but it's just, it is what it is. Realistically, I'm probably around like the 50% win rate, because this is all one trade here, and then this is one trade, and then this is 2 separate trades here. So I only took 3 trades today, but because of the amount of trades that it actually shows up on here, it doesn't really count as 3 trades. Same thing over here as well. So I can basically just like click through each one of these days, and it'll show you all of the trades that I've actually taken, which this day was actually a very psychologically draining day, because I ended up losing $23,000 on one position alone. There was so much volatility inside of the markets that I ended up losing $23,000 on that position, which I then ended up making back a little bit more than that, leaving me in a net P&L that's green. So I definitely had my struggles, my ups and downs with this account. You guys can see my net daily P&L curve here, which once I actually hit $40,000, $46,000 in profit, I did have a little bit of a 50% equity retracement on my account there before slowly building back up. And that's the thing, is for me personally, once I actually take like a big loss like this, and the one thing I want you guys to take away from this video is I'm not a perfect trader. I'm always just trying to be the best trader that I am. So there are times where I may take a loss bigger than actually planned. Again, I'm here to be transparent with you guys and show you guys a journey and show you guys that it's not all ups. Like a lot of these other gurus just show you that they're always constantly winning. They're making huge amounts of money, which, you know, you don't really know what's actually going on. So for me, you know, once I actually hit $46,000 in profit, my ego went up, my confidence went up, and I felt a little bit bloated. I increased size and I took a loss bigger than normal, which I ended up cutting quite well. And then from there, it was really just focused on recovery and looking for those base hit trades, which is why you see me starting off the month of April, $15,000 in profit, $30,000 in profit, break even day, practically $860, which I made a full vlog on this day. If you guys want to go watch that on my main YouTube channel, at Real Lambo Raul. Then the next day was an actual losing day of $21,900. So my biggest green day is 30 grand. My biggest red day is $20,000, which realistically I only have one red day for the month, because this is basically a break even day, although it is red by just slightly, which on this day as well, as you guys could see, I ended up losing a little bit under 1R here, a little bit under $7,000, lost about 6 G's on this trade. And on this next trade, I made just around $5,000 on this specific trade, which this specific day was really a tough day because I was 1 point away from my take profit being hit, which it would have been a $25,000 day, but then price came all the way back down and hit my trailing stop loss before that. So, you know, continuing to look at my statistics here. So I do have a 40% win rate per trade, not per day. I have an 80% win rate per day, but a 40% win rate per trade, which again, you know, like I feel like the win rate is a little bit skewed right now because the way Trade Locker fills you in and fills you out of position. So realistically, I do think my win rate is about in the 50%. I would have to kind of go in and actually do the math manually to confirm that, but it's definitely above the 50%, which realistically, what I've noticed, and I actually do have some notes here on my overall bi-weekly kind of review here and different things that I need to improve on. So the discrepancy between my per trade win rate, which is about 42%, which again, I think it's a lot higher, and my daily win rate, which is 77.8%, which I would have to readjust. It's really sitting at 80%. So just excellent risk management and position sizing. I'm managing to end most days profitable despite having fewer winning trades than losing trades. This indicates strong overall risk management, but potential room for improvement in trade selection. So the improvements that I'm going to be looking to do over these next 2 weeks is really focusing on my number one trade selection enhancement. So considering reducing trade frequency to focus on highest probability setups, and document why you enter each trade to identify patterns in winning versus losing trades, which again, guys, I'm not perfect. You know, throughout these last maybe 3 weeks, 4 weeks, I haven't been journaling as much as I should. And I don't want to say the results show that because the results are still pretty solid, but I feel like I'm definitely missing out on a lot of crucial data. But again, you know, I'm human. I've got a lot of businesses that I'm involved in. I'm making a lot of investments. I have a family as well. So sometimes things do get a little bit hectic, but again, I'm getting back into the process of journaling as of like 3 days ago and journaling more consistently. And it's fine. You know, you're going to make mistakes as a human and you're not always going to be performing to your best, but the goal is to try and perform as best as you possibly can. Then of course, psychological management, which is super important as well, which I need to establish a clear daily loss limit to prevent going on tilt. I'm going to be implementing a mandatory cooldown period after losses. So if I take 1 loss, my mandatory cooldown period is going to be 5 minutes. If I take 2 losses, my mandatory period is going to be 30 minutes, and then so on and so forth until I hit 3 trades a day. Then I'm done. So I'm also going to create a trading journal focusing on emotional states during trades, not just the actual trades themselves. And then obviously risk management optimization. So I need to leverage my R multiple more by focusing on trades with similar R multiple profiles before. So really focusing on trades that are going to give me 4, 5, 6 R multiple and managing my emotions to be able to hold to those 4, 5, 6 R multiples, which when we're using order flow, again, it's not really like a huge move. Like one of the moves that I caught today was a 10 tick, 12 tick risk for a 50, 40 tick gain. So that's pretty solid. That's like a 4 to 5 R multiple. And then I need to consider scaling position sizes on trades that meet multiple entry criteria or just criteria in general, because what I've been doing recently as well is I just kind of been trading one size. I've been trading either 15 lots or 20 lots, and then that's basically it. I did actually size down before due to the increased volatility inside of the markets, but it seems like there's a lot less volatility now. So what 10 lots was last week is not what 10 lots is now, and I can definitely start increasing my size again. And then of course implementing 3 strikes rule for consecutive losses. So these are going to be the improvements out of the data from the last 2 weeks of trading here, which realistically I really only have, I really only have like 10 days of trading throughout the entire month. I didn't trade yesterday because I was traveling as well. So again, that's kind of like the discrepancy there, but overall really solid performance. I'm pretty happy with the performance so far, especially comparing my red days to my green days. Again, looking at the green day, my biggest green day is 30 grand. My biggest red day is $20,000. And then on average, I'm having about anywhere between like $8,000 to $10,000. Like usually you guys can, I had another big green day on Friday. I had a decent day today as well with an $11,000 gain. Without further ado, let's continue to actually go into Sierra charts and break down the setup for you guys that I'm really focusing on that is giving me these types of results. So the one thing I want you guys to understand are different areas of liquidity. So we have low volume nodes in the markets where typically we see a lot of just aggressive buying or aggressive selling through these levels. And then we have high volume nodes where the market finds as and deems as fair value, where we see a lot of transacting going on and we see a lot of trading activity going on. So earlier in the morning, one of the setups I was looking for today is we did have a breakout to the downside, but before that breakout to the downside, we actually were trading inside of this high volume node, which price action broke out to the downside, pulled all the way back into this high volume node, and notice the amount of times price came into the high volume node and rejected. Into the high volume node, rejected. We can even go down to a 1 minute time frame to see this a little bit more discreet. So one of my favorite setups to look for is essentially trapped buyers or sellers at these high or low volume nodes, typically high volume nodes, and really looking for reversal trades at these high volume nodes once we've identified and confirmed that there are trapped traders. So essentially down here at support where we have like the value area low, where we have this high volume node over here, this is where I would be looking for trapped sellers, which you could see the amount of times price popped back up from this area here before originally breaking down, and then even then trapping sellers at the low of day and then pushing back up and maintaining above this area. So this would be a really solid area of liquidity where a lot of liquidity is being generated, and this is an area where I'd be looking for trapped sellers. And then vice versa, once we're near the high of the volume profile of kind of like this little bell curve here, this is where I would actually be looking for trapped buyers in this situation. Now again, you know, as price action gives us new data, these areas are going to change. You know, this probably would be considered a little bit more of a low volume node now because there's just not as much transacting going on as over here at the value area high, where we have a lot of volume being traded, and the value area low and the POC where we have the most volume on the day being traded. But when the session was actually open, this is where we had the highest volume of the day being traded, where our POC actually was here. So we actually pushed up into this area of resistance and we rejected the 5470s. And again, we had a pullback back to the downside, huge move to the downside, pull back up, rejection, pull back up, rejection. Then price pulled all the way back up into this area. And this is when I actually start diving deeper into the footprint charts. So this is going to be a 20 tick range bar. This is going to be a 20 tick footprint chart here. So the area that I want us to understand that we're trading at is the high volume node, and we're also trading at the 5470 area of resistance. So we have 5470 being here, which is going to be the resistance range and the high, and then we also have the high volume node being inside of this general range here. So from the 5465s all the way into the 5470s, let's call it, is where the high volume node actually is. It's where we see a lot of volume and a lot of trading actually going on. You could see that from the delta here. Now the one thing I want you guys to notice is, for those of you guys that are already using the footprint charts, or if you haven't started using the footprint charts, then make sure you guys go watch my other videos to get a little bit more of an understanding of what all this data actually means. What I want you guys to notice is essentially this is going to be a delta footprint chart. So what I want you guys to notice is all of the aggressive buying. So anything that's in green is going to be a positive delta, meaning that there was more orders that actually came in and aggressively hit the ask versus the bid, and the discrepancy between that, or the difference between the buying and the selling, is what's going to give us the delta, which we have a lot of aggressive buyers at these 4070s. I mean, look at how many times buyers tried pushing up into this 4070s and we had a rejection. Buyers tried pushing up again into the 4070s. A lot of aggressive buying came in, rejection. So you could see the amount of aggressive buying, especially here. This is actually where I first started taking shorts. So I ended up taking 3 positions here. I basically scaled into 3 positions here on these shorts. So again, what I'm identifying is, are we trading at a high volume node? And if so, who is the aggressor in this situation? And are those aggressors getting rewarded for their aggressive trading? Is really the thought process that I ask myself. So are we trading at a high volume node? Yes. And we're also trading at an area of resistance that we've rejected in the past. And also, who is the aggressor in this situation? Well, we're trading at a high volume node, we're trading at resistance, and buyers are the aggressor in this situation. Because in this situation here, if sellers were the aggressors, but we're still kind of consolidating around this resistance range, then I'd be looking for a breakout to the upside. But in this situation, the buyers are being the aggressors here. Like you can even see on cumulative delta, most of the cumulative delta clusters here are going to be bullish here. And you can also see this over here on delta by price, where it basically just shows us how many aggressive contracts came in and actually hit that specific price, and whether there's more aggressive buying or selling. And you can see how aggressive the buyers are being from basically these, let's call it these 68s all the way up into the 71s. There's just a lot of aggressive buying through here, but yet we failed to actually push price higher. And what that tells me is that there's seller absorption going on, meaning that there's passive sellers, whether it be one seller or multiple passive sellers, basically anybody with a limit order, consistently absorbing these aggressive participants' positions. So you just want to basically think about a sponge in water is what it is. So for me, once I saw that on this candlestick specifically, we had to push to the upside. We saw buyers get really aggressive, and then there was a discrepancy between the candlestick and the data behind the candlestick. So we could see how aggressive the buyers got here, but we ended up closing bearish. So at that point, once I've identified that that absorption is still holding, and then we also have all these trapped buyers here, I decided to execute myself into the very first position with my stop loss up here, where these sellers got really aggressive from previous price action here at 54.73.5. Keeping the stops tight and looking to target this area of support here, which is going to be right here. Looking to target this area of support where we've seen price action just consistently bounce back up. Again, it's like, yes, I could have targeted this area of support all the way down here because it's like the current low. But what I like to look for is realism and pretty much what's more realistic for price action hit. We're more realistic for price action to come down here before we come all the way down here. And then all I simply do is verify if I'm going to have a positive or a multiple on this trade. So my very first entry was just around the 69s. My stops was at the 73s here. So I'm going to kind of pop this back up here. Look for that entry at the 69, stops at the 73s. So on that very first position, I had just around a 15 or a 16 tick risk, looking to gain 50 ticks. Cool. Solid. That's a positive R multiple. That's over a 3R multiple. That's a position that I'm happy with. Price action ended up pulling all the way back up. And what we could see is there's some reward for the buying here. This was another attempt for the buyers to continue to push price up. But you guys could see pretty much at the highest point of this resistance range, this is when buyers got most aggressive. And we actually saw price action fail to continue to push higher, showing us that that absorption is still there. Those passive sellers are still present, and they're showing their force here. And we see price action come back down. And once we got into the 70s, I decided to enter myself into another position on a short, same stop loss here at the 73s. And then price action gave us a little bit of a move to the downside. We popped back up. This was the buyers' last attempt here. We popped back up. We could see how aggressive the buyers got here. And as price action got stuck here, like you could literally see it. You could see the volume profile start to increase, showing us that there's more orders being traded here. I mean, look at this specific price. We have 264 contracts traded, yet a -4 on the delta. That should be a huge discrepancy and a huge red flag. So I'm looking for these outliers within the data. And what we can see is a lot of aggressive buying, but the candlestick closed with a doji. So as this aggressive buying came in and price started to reject and come back down, I decided to execute myself into my very last short position. Same stop loss here at the 73s, and price action dumped all the way back down into this area of support. So I hope that was as clear as I possibly could be. Again, for those of you guys that aren't into order flow just yet, I highly recommend you start getting into order flow, because you get to really see where the real liquidity is resting inside of the markets, and you get to have a deeper understanding of what's actually going on. And realistically, what you're doing is you're building yourself a lot sharper and a lot more of aggressive edge compared to any price action trader. Because to give you guys the example here with price action traders, you know, my entries were up here in the 70s, which is going to be basically all the way up here. And I started shorting on this candlestick right here. You know, a typical price action trader probably wouldn't have even taken this position, because most of them are be waiting for like an engulfing candlestick, which be breaking out to the downside. And a lot of the times they're going to FOMO in after they see this big breakout and have no idea where to actually target, because they FOMOed into a position. So I highly recommend you guys start getting into order flow. Going to have a lot of order flow content that's out there for free, so you guys can start getting into it. And I hope I was as clear as possible with this. If you guys want to actually get more of my trade recaps, I post trade recaps on my Discord for free almost every single day. All you guys have to do is go to any one of my last Instagram reels and comment the word Discord. My Instagram is Lambo Raul. You can comment the word Discord and I'll shoot you over the invite to my free Discord server. Other than that, guys, I hope you guys enjoyed this video. Let me know if you guys want more of this type of content, but this is one of my favorite setups to actually trade. So to give you guys a quick recap, what I'm looking for is if we're pushing up into a high volume node, I'm asking myself the question, okay, who's being the aggressor in this situation? Are buyers being the aggressor, or are sellers being the aggressor? And are those aggressors being rewarded? So it's a lot more than just that, but that's the thought process that goes behind these actual setups. Because if we're pushing into a high volume node and we see sellers are being the aggressor here, but price action still stuck at resistance, and you see cumulative delta slowly slowing down for the sellers, meaning that there's less and less aggressive selling, there's a higher probability we're going to break out to the upside, and I want to get in before the breakout to the upside versus most retail traders will be getting in after the breakout to the upside, which you're getting in with the institutional flow when you're using order flow compared to when you're not. And in this situation, since buyers were being the aggressor here, but we were stuck at this resistance range and volume was picking up significantly, then there's a higher probability we're going to break out to the downside. And I just simply position myself looking for a good stop loss size, looking for a good take profit, and verifying that it has a positive R multiple. Other than that, guys, I will see you guys in the next video.